Good afternoon. This is Rich Morrison, and welcome to my latest edition of the Thinking Cap. Today it's opening day for Major League Baseball. All is right with the world. We've got a new baseball season beginning. That means spring is here. The Cubs are starting out 0-2, so I'm happy about that as well. So, what else is going on with opening day? Well, besides baseball opening day, I think opening day for the markets is coming up here on Monday, and that's when we have our prospective plantings report. Now, the it's just kind of a blip in the road, but these will be USDA's first official estimates of planted acres based on surveys that they did here in the middle of March. So they do kind of mean a little bit. They mean a little bit to the market. Also, quietly, and I'm not going to talk about it today, but we do have a March 1 grain stocks report that day as well. And that grain stocks report sometimes is more important than the acreage report for the markets because it's going to indicate what we used over the last quarter, and that's the winter quarter. That's when we feed, but and those are the numbers that we don't necessarily see on a weekly basis. So we'll keep a close eye certainly on that, especially I think in corn where we did see a lot of disappearance over the winter. But when we look at the acreage numbers, this report will be out at 11 o'clock Central Time, 12 o'clock Eastern Time on Monday. So I call this the first pitch of the season, and the season will be underway shortly thereafter. Now, keep in mind that these are just intentions, these are not final. You can see here that the difference between the intended acres and final acres can be very large in a lot of years, especially in wet years where you tend to see some prevented planting. Saw that in 2019, 2020, 2015 was another year. Occasionally, we'll see a dry spring where people will maybe tear up a little pasture land if there's not a lot of cattle or something. So maybe you'll see a few more than intended acres. So that's, again, these are just a preliminary set of numbers. So let's start out looking at a few of the crops. We'll start out looking at corn. These are the average estimates for this report. Back in the middle of February, USDA had its Ag Outlook Forum out. They estimated corn acres at 94 million this year. The average trade estimate going into the report is 94.4 million acres. So everybody's leaning towards a higher number. You can see here the difference between the low and the high estimate. It's about a 4 million acre difference. Today alone, we've had two successful farming, and I think agmarketnet.net came out with 95 plus million acre numbers. So that's part of the reason we're seeing a bearish trade here going into the report. So, how would this affect us on the balance sheet this year? Well, I've got three alternative balance sheets in yellow. The first one using the Ag Outlook Forum number from back in February at 94 million acres. The second with the average trade estimate. And the third with Successful Farming's estimate. Their survey had us at 95.9 million acres. What would that mean to the bottom line? Well, I do think the more acres you have, the lower your yield should be because you're bringing on some fringe acres. So, what are you using for trend yield? I fudge that down as we go to bigger acres. You can see production anywhere over 15.5 billion, supply of corn somewhere over 17 billion. I do think demand will be strong again this year. USDA was forecasting 5.9 billion feed demand back in the benchmark numbers. I think that's too high. The cattle and the hog and the poultry numbers don't support that at this point. So I use 5750. I think if you had more acres, probably cheaper corn, maybe you get it to 5.8. We'll see. I do think ethanol is probably going to run at a record level. Export demand should stay firm again with not much competition from around the globe. But you can see ending stocks would push up close to 2 billion, if not above 2 billion bushels. So average farm price, the government said 420 back in February. I think maybe 405 if you get this type of a stock number, maybe 395 if you get down here to 2 point or up to 2.2 billion. So that's why the market's trending lower here as we head into the report here this week. We're still trading up around 440, 450 December corn at the moment. And if you look at the December corn chart today, I just updated this. 443 and 3/4 is where we're sitting, although we did trade to a new monthly low early this morning. Um, the best thing I can point out here, the RSI at 34, stochastics down in the 20s and 30s would indicate we're probably leaning towards an oversold market. And I would think that a lot of these reports too, as you go one way into the report, that almost makes it easier for the surprise to be the opposite direction. So if we're trending lower into Monday, I would tend to think that a bearish surprise would be would be unlikely at this point. And so I would lean towards maybe a more positive reaction, even if the report does come out with 95 million acres. I've been thinking all along we'd be flipping back to last year's number, which was 94.6, still leaning towards that type of number. Of course, weather is going to dictate a lot of what happens going forward. Now, if the market's going to trend higher, a couple of things to point out here. We've got a huge cluster of moving averages of all converged right at 450. Which is kind of weird, but it tells you that the volatility had shrunk in this market and things had kind of settled in to that 450 area. So that's going to be your first level of resistance to the upside. Next is the 460 level, which is the 50-day moving average. We have our insurance price at 470, which I know everybody that bought ECO, and there was a lot of it sold this year. I think guys are looking at ECO right now. It's basically in the money. We're down over 5%. So if we have an average crop, you'd be looking at a payment. So we're looking at that as a blessing at this point, I think, from a producer standpoint, that they've at least got that protection in place if this thing continues to implode. You do have a double bottom down around 428, which would provide some support. Now, seasonally, the markets don't tend to trend lower right now. We tend to trend a little higher as we go into spring. And so that's what kind of leads me to think that we could see some upside. And if you look at what's happened over the last several years following the March intentions report, more often than not, we tend to see the market trend higher, especially, since we're already talking about this big acreage number, then the odds of getting a bearish surprise, I think, would be a little bit on the lower side. So 4 straight years we've traded higher coming out of this report. We'll see what happens on Monday. For soybeans, kind of just the opposite. If we're going to increase corn, we're going to see bean acres down. The average trade estimate at 83.8 million. The ag outlook for them was at 94. You can see that the difference between the high and the low guess. The number right now would be down about 3.2 million acres. So one thing to keep in mind, total corn and bean acres estimated to be higher this year. We'll talk about why in a minute, with probably less overall wheat, especially less spring wheat, probably less cotton, especially down in the Delta. And so, again, you look at some different alternatives. The ag outlook for them had 84 million acres. The average trade estimate, 83.8. Successful farming came out at 82.7 this morning with their number. So they're down quite a bit. So, this is what kind of makes a market. So depending on what you plug in for yield, you're looking at, supply of beans anywhere 4.7 down to 4.6 something. And then demand also is a big factor. I'm again thinking USDA is a little aggressive on its export number, especially coming off of this record harvest in Brazil and with China not stepping up and buying more beans than normal. And so I'm thinking we're going to be down below 1.8 billion. We'll see. Crush is expected to be a record this year coming up. Just depends how big that record is. And so, depending on what you put in for export demand, really is going to dictate where ending stocks are. But stocks are expected to fall this year. And so it'd be hard to be real bearish beans, I think, at this point. The bearish thing about soybeans continues to be the world numbers. That world stocks to usage is at a record high. Brazil acres, I just saw another estimate this week, expected to see a big jump according to the U.S. Ag Attaché in Brazil. They're expected to increase acres this coming fall. So I think the bean market's going to be more or less driven by what happens in South America than what happens here in the United States. So November beans, they've bumped today again. I think part of that's this pre-report anticipation of a bearish corn, a bullish bean report, and so beans have bounced above the 10, bounced off that $10 support level. We've turned the indicators higher or back above the 9 and the 20-day moving average today, back up to 10.20. I don't really want to be a seller at the moment, given what we think's likely to happen with acres. I think if you get up around the 1050 level, the 200-day moving average, then and above the insurance price, especially, would be a good goal. And that's always one of my goals is to market above the insurance price to increase your guaranteed dollars versus what you've already got locked in. And what's the report done to the market in several years past? It's been kind of hit and miss on beans. We've had a little more higher than lower trade, but here lately, just kind of a mixed bag. On wheat, all wheat, the trade expects us to be at 46.5 million acres. The Ag Outlook Forum had us at 47 million. Spring wheat is where I think most people are expecting us to be down. The average estimate at 10.5 million acres compared to 10.6 last year. I've seen some other estimates maybe down below that, seeing some of those spring wheat acres going to corn and or soybeans. So we'll keep an eye on that mix here in Monday's report. But looking again at the balance sheet, there's really nothing here. If you look at USDA's numbers, if you look at the acres, there's not a big enough variance here to change from what successful farming had as well. If you use a 50 bushel yield, which is down from a year ago, you're sitting with production around 1.9 billion. We don't expect any big changes in demand. USDA, basically forecasting demand to be about unchanged from this past year, seeing ending stocks still in the eights. So nothing here. I think wheat's going to tend to then follow corn. The only issue is, the two issues that wheat has right now. Number one, the potential end of the war in the Ukraine, which is thought to probably provide more supply to the world, or at least supply that's more easily accessible to the world. So that's been bearish. The other factor here in the United States is going to be Southern Plains weather. And right now that we've kind of taken that off of the table as a factor. We'll see eventually if that comes back into play, but for the moment, the market really not paying much attention. So KC wheat has really followed corn down over the last several sessions. We're back below all moving average lines here this morning, trading to a new low. Again, we're kind of moving the indicators at the bottom down into oversold territory. You can see we got really good support down around 550. So I wouldn't want to be a seller at this level. Certainly the $6 mark has been a target we've had for the last several months. We've had a few different opportunities. I'd probably still hang in and wait for a better day there. Finally, looking at cotton, that's going to be a big number to look at as well. The trade estimating cotton acres below 10 million. The Ag Outlook Forum had us right at 10 million. Last year, 11.2. So I'm still not hearing anybody in Texas tell me there's anything better to plant than cotton this year. However, I think in the Delta states, you will see some other crops get planted. And I do think that the intended acres, at least for corn here, starting out will be up quite a bit. Mississippi, Louisiana, more rice acres expected in Arkansas this year as well. And so looking at some possibilities, the Ag Outlook Forum at 10, the average trade guess at 9.9. The National Cotton Council came out at 956 back in February. And so, depending on what you put in for yield and harvested acres, you're looking at a potential now for stocks to drop this coming year. And so I don't think I'm bearish at all cotton at this point. I would tend to lean towards the positive side, even without a lot of expectations for export demand. You would assume it's going to improve a little bit, but you can see some price estimates down here at the bottom. If you drop down to 9.5 million planted acres, then I think you got a real good shot at trading back above 70-cent cotton on a cash price. And that's what the market has done right now. We're anticipating what's going to happen in this report, and we've traded cotton today back above 70 cents. We're back above the 100-day moving average. If we close here, it'll be the first time since early December. And we haven't been above the 200-day, at least on this chart. I have to go back to last spring, I think, before we traded above the 200-day moving average. So, I'm kind of in the camp of thinking 72 to 74 cents, probably a place to hedge cotton. I don't, again, want to be a seller today, but things to keep in mind, we're trading above the insurance price right now. And so again, that's always a goal, I think, from a marketing standpoint, is to improve your guarantee by selling above that price. And so that once we get the report behind us, to me, it's almost like game two. Game one of the season, everybody's excited. We're, the crowd's full. We're sold out stadiums. Day two, we'll see what happens. So Day two, after we get the report behind us, we're going to go back to trade and weather. What's planting weather look like? Can we get all these corn acres planted? And if you look at the CFS forecast here for the month of April, we're looking at pretty wet conditions right through the heart of the corn belt. So now the southern states, it looks to be dry. And so you would anticipate pretty good planting pace across the south. That delta area that might plant a few more corn acres this year, probably not going to see prevented plant. But if you get into the month of May, still kind of trending towards wet in the north and dry in the south. So shouldn't see planting delays in the south. North could be a little bit interesting. And so, we're going to be hitting and missing in between showers, it looks like here, at least at this point. And if you look at our plant dates, these are our NAU maps. We've got it broken out. Your first planting date for crop insurance, you can see in the south and the Delta, even up into the mid-south Tennessee, the Boot Heel of Missouri. We're already there. We're at past the first planting date, so rock on in those areas. April 1st, the day following the acreage report, next Tuesday will be the beginning planting date for much of the next tier of states. And then you move up to the 5th, the 10th, et cetera. So we're going to be anxiously looking ahead over the next couple of weeks to put some corn in the ground. Soybeans, pretty similar. Once you get into the 5th of April, every 5 days, you bring on some new areas as well to get the beans in the ground. So I'm sure we're going to be anxious. We hope this year ends up being a great one for everyone. Hope you get to celebrate a pennant win this year. We all know that the season, like baseball, it's a long one. So a lot of things happen throughout the year. I encourage you to continue to give a watch and listen to these Thinking Cap videos. I encourage you to subscribe on our YouTube channel so you do get a notification when we get a new one posted. And we'll continue to provide information as we get it to help you all make decisions throughout the year. Take care, have a good one, and knock it out of the park this year.